More signs of a rebounding economy, this time from Lyft, the ride-hailing company posting a smaller than expected first quarter loss, and it beat revenue and active rider expectations. Joining us now first on CNBC is Lyft's co-founder and president, John Zimmer, and it is great to see you and to see news that seems to reflect the return of some semblance of normal, or at least we're getting there, John. Tell us what you're seeing and specifically sort of the distinctions that you're seeing around the country in terms of return, because it does seem, to be honest, somewhat inconsistent, but it's interesting to look geographically.
Sure. Thanks for having me. We had an extremely strong quarter. We're starting to see some really nice tailwinds for rideshare. It is, for us, a relatively broad recovery. Obviously, places where vaccination is higher, where limitations on people going out are lower, we're seeing greater signs of return. But overall, quarter over quarter, we saw a 7% increase in revenue.
Talk about the possibility of higher ride costs, because that does seem to be an issue. And I've gotten in the back of both some Lyfts and some Ubers, and it costs more than it used to.
Sure. I mean, we are seeing rapidly increasing demand, which is a good problem to have. At the same time, we're increasing incentives for drivers to get back out on the road. Drivers are therefore earning more per hour than typically. Some markets, they're at all-time highs between $35 and $40 in top markets, which can mean prices increase at certain times, at busy times for riders. But overall, we think the marketplace will continue to get to balance over the next quarter or two. And, coming out of the pandemic, it's the kind of the reverse of going into it, where now we're seeing rapidly increasing demand.
We have not had an opportunity to talk since you announced plans to sell your autonomous vehicle unit. Of course, your biggest competitor had done something similar before. Why did you decide to do that?
So when we started that unit about 4 years ago, there were two strategic decisions. Number one, we wanted to be the go-to platform for autonomous vehicles. We used to call that open platform. We now call that Lyft Autonomous. And number two, at the time, there weren't as many well-funded and kind of far along autonomous self-driving system efforts. And so we wanted to make sure we had access to a platform. Now there are several efforts that are extremely well-funded and very far along. And the new approach that we brought to market has been successful. It's now going to have a ton of funding from Toyota, and it was right to focus on our Lyft Autonomous platform, which takes advantage of our hybrid network, our marketplace technology, and our fleet management to bring the best, safest vehicles to our customers.
But do you think that the timeline changed in terms of just how quickly this rolls out? I mean, I think some of the conversations we've had, and with so many others as well, 2, 3, 4 years ago, the expectation of how quickly this technology would actually emerge has been a lot slower, no?
Yeah, I think that's totally fair. We were hoping it would happen more quickly, but this technology is taking time. It's important to get it right, but it is coming, and we're excited to be the best platform to bring it to.
One of the other things I wanted to ask you about is, and you saw your stock take a bit of a tumble when this happened. There were some comments by the labor secretary from the Biden administration suggesting that gig workers really should be classified differently as employees. How concerned are you about that, given the debate that's happened all over the globe and, of course, right here in the United States?
We don't believe those comments suggest any change in direction from the government. Following Prop 22, it was very clear where drivers stood, where voters stood on the fact that they want independence and benefits. And we're having extremely productive conversations with policymakers at the state and local level, as well as at the federal level. The primary classification policy is handled at the state and local level. And I think we'll have additional models to demonstrate that independence plus benefits is the right path forward in the coming quarters.
John, we're looking right now at an article that appears to have just come out from the Washington Post. I don't know if you know about this. It says that the Labor Department is rescinding a rule that made it harder for gig and contract workers to argue they were entitled to minimum wage and overtime protections, part of a push to undo Trump-era decisions that favored businesses and employers. So don't you think that there is a bit of a distinction or difference here?
Again, the primary classification policy is handled at the state and local level. Of course, the Department of Labor can put out their positions. That happened in the previous administration. We expected this administration to act differently. So none of this is a major surprise to us. None of this, in our opinion, changes the direction of where things are going, and is not extremely surprising on our end.
Very quickly, just want to ask you, just one question on this, though. Did it help when the Trump administration put that rule in to begin with? I mean, you've got to think that there's some impact that federal regulations would have, at least on how they influence states as well.
Yeah, I think the federal government, and again, we'd have to have a law created by Congress to drastically change anything aside from what you're seeing here in terms of how things are looked at. But I would love the federal government to put out guidance for states on how to establish independence plus benefits. I think that is possible. This type of thing takes time, especially at the federal level. It will likely take years. But at the state level, you will see over the coming quarters new models that are more similar to Prop 22.
Shepard Smith here. Thanks for watching CNBC on YouTube.